Welcome back. Today we're diving into one of the foundational topics in health insurance, basic medical expense policies. These policies are often referred to as first dollar insurance because they provide immediate coverage without requiring the insured to meet a deductible. Basic medical expense insurance is designed to cover essential healthcare services. This includes expenses like nursing facility services, rehabilitation care, home health services, private nursing, outpatient treatment, and even dental and vision care. It's a great option for individuals looking for upfront benefits. Think of it as a straightforward plan that pays benefits for a specified range of services without requiring a deductible, unlike major medical expense policies. While these policies are convenient, they do have some limitations. Let's explore those next. Basic medical expense policies often cap the number of visits, the dollar amount per visit, and the overall coverage period. For example, they might cover only a certain number of physical therapy sessions or pay up to a fixed amount per doctor's visit. These policies also typically offer lower benefit limits compared to major medical insurance. This means that the benefits provided might not fully cover the actual expenses incurred. Another important concept to understand is usual, customary, and reasonable expenses, often referred to as UCR. Let's take a closer look. UCR is a standard used to determine the fee charged by a healthcare provider. For example, if your physician charges a fee that is deemed reasonable for your geographic area, the policy may cover it. However, if the fee exceeds what's considered usual and customary, you might have to pay the difference out of pocket. Let's apply what we've learned to a real-world example. Imagine you're visiting a specialist and the fee is $200. Your basic medical expense policy has a UCR limit of $150 for this type of visit. The policy will cover $150, but you'll need to pay the remaining $50. So while basic medical expense policies can provide immediate benefits, it's important to be aware of their limits and how UCR works. Let's wrap this up with some key takeaways. Here's what to remember. Basic medical expense policies are often called first dollar insurance because they pay up front. They have limitations on coverage amounts, visits, and periods. Usual, customary, and reasonable UCR expenses determine the amount your policy will pay. That's it for today's session on basic medical expense policies. If you have questions or want to dive deeper into this topic, feel free to revisit the chapter or try out the practice questions provided. Thanks for watching, and I'll see you in the next video.